So lesson number 8 is all about complexity is real. Now, what I mean by that, if you've been listening and watching through those other sessions, those other educational sessions of this series, you will see that there is a lot of moving parts. And I just wanted to iterate that in terms of exactly what we've sort of been talking about. So from a home loans point of view, you've now learnt that there's principal and interest, interest only, or investment loans, principal and interest, interest only. Then you've got loan to value ratio percentages, which range from -60 downwards, and then 60 to 70, 70 to 80, 80 to 90, 90, 95s. That is also then being priced in to all of those principal and interest or investment or home loans. Then you've got the loan amounts, and so if you're less than 150, it's the most expensive rate, and then you move up through the different price bands or borrowing bands, and obviously all of that means that you get to, different types of pricing for different types of lending. Credit policy, everyone has different credit policy. Borrowing capacity, same thing. They are different sort of techniques and skill sets. So you might have a really easy or simple credit policy, but in terms of their borrowing power is quite limited. Or you might have a complex lending strategy that you've got to do that you're trying to solve for, and then ultimately you also learn that most of the lenders won't do what you're trying to do as well. Then you've got property valuations, which ultimately work out your lender's mortgage insurance or loan to value ratios attached to that as well. So a lot of moving parts. Now the best way for me to showcase that is to just take you through one of our spreadsheets. Now, this all ingests into decision engine tools and modern technology that would allow brokers to be able to do all this type of work. But I just wanted to sort of showcase to you all of the sort of moving parts. So if I move over here and start talking to you, you can see we've got the features and the different types of matrix and what is it relating to. Is it genuine policy? Is it acceptable income? What is it about the security? What's the description? Where will you find this information in these complex spreadsheets? But you can start to see as you scroll down, there is pages and pages and pages of this information in terms of the types of things that we need to understand from a credit policy point of view. And then if we start to get into, okay, how do we help? Here's some of the best rates that are available at the moment and the different types of lenders and what they might be offering. And then is it available in that state or territory? Because in some cases, some lenders only lend in certain states or territories. Then we want to have a look at, look at all the different rates from the different types of lenders. You've got basic, standard, equity, intro, fixed early introductory rates, 1, 2 year, 3 year, 5 year fixed. So if we keep moving this along, we've got all these sort of basic rates, but it gets even more complex, when we're looking at all the different lenders, when we start to think about the different types of, here we go, pro-packs. Now this is where it all starts to go really crazy. So professional, 1 year fixed, what about their limited? Then you've got sort of lending amounts and loan values and interest only versus principal and interest, and where is it applicable to? So we can bring this information right across here. You've got all of this information, all of these columns, and these are the interest rates. That's what's available for that lender, and there's hundreds of products with each different lender. You can start to really see all the different types of lending products and so forth. You get the picture, don't you? You get the picture in terms of there is so much in here to see and to try and understand, and that's why that's all ingested into usually these very sophisticated, complex credit policy and decisioning tools that you use when you work inside the business. But if you're trying to do this at home, that's what you've got to start to work out. You've got to start to work out what's the purpose of the loan, then what is my loan to value ratio to understand, and then how much am I going to be borrowing from an aggregate point of view, and then you can start to siphon that down into more simplified ways in which you can then start to detect the products and the loans that are within that bandwidth for you to potentially go back to your existing lender or to go and source that through a new lender, or ultimately put that together through a broker. And I think that's the message here for me in terms of, it's really about deciding what's important to you and how much is going to be in there. Because the reality is there is a lot of complexity. It's if you think picking a mobile phone or phone and call plan is complex, or insurance policy is complex. This is on steroids when it comes to that. And that's why you do find that in the insurance space, there's brokers. And obviously in the mortgage space, there's mortgage brokers who do that work for you. So that's how I'm going to finish off in terms of, the complexity of this. But I do want you to start to think about in terms of how you're going to tackle this. And there is a bonus video inside this series of teachings that I've done, which is really going to focus in on why you would consider using a mortgage broker, because there is so much complexity. And so I'm going to talk to you about some of the pros and some of the benefits that you would get in terms of working with a broker as opposed to doing it yourself. Because make no mistake, if you're going to do this well and you're going to do this with high due diligence, then it is going to take a fair bit of time, because you're talking about about 45 lenders working across those markets, depending on what sort of valuations you get on your property, and they can fluctuate between lender as well. Then if you think, okay, well, I've got the best interest rate, but then you don't, you fail on their credit policy, and then so all of that effort and work, and you get a decline. So they're the types of things you want to be thinking about. So as I close out in lesson number 8, it really is about just understanding there's a bit going on here, right? And that's why brokers are licensed to do the work that they do, and also people that work in the banks are also trained heavily in understanding credit policies and borrowing capacities and all of those things as well. So that finishes up in terms of that. But I do encourage you to check out the bonus video here, which will talk about why you would consider using a broker. So thanks for watching that educational session. As you know, I'm passionate about this stuff, and I really do want to see you take action. Now, whether you do that yourself, that's fine. But if you do need help, I am super proud of our mortgage team here at Empower Wealth, and they would love to help you. They are helping thousands of people every year, just like you. They're multi-award winning. We've won customer service awards and national awards for the work that we do. So I know that they will be able to look after you. So leave your details below, but please make sure you do something with this information and knowledge that you've just learned about. Now let's get into the next episode.